Welcome back. Like in March, there was a lot of noise about the SEBI margins because it had lowered the threshold on market-wide limits for F&O stocks for the purpose of imposing ban, and upped the margin for exposure to such stocks. In the cash market also, the margins were higher to curb volatility. Now we understand that they have been rolled back. What does this mean? We have Nitin Kamath, founder and CEO of India's largest retail brokerage, which is Zerodha, and Sandeep Parikh, founder of Sensex Law Advisors. Gentlemen, good morning. Nitin, of course, for starters, by the way, let me congratulate you on that nudge thing that you did. It didn't stop people from buying Lakshmi Vilas Bank, but you did what you could do. But tell us, what would be the impact of the new SEBI norms now?
Thanks, Anuj, for having me on this. Firstly, so I think around 800, 850 stocks, kind of qualified in that higher margin requirement, where exchanges were charging 40% as margin versus the VAR plus ELM, which is required otherwise to trade. So these 850 stocks potentially can get more liquidity because of this. Market-wide position limit. The thing is, most of the trading today, 80-85% of all trades are essentially index derivatives, right? So the F&O trading business from stock futures and stock options isn't really too much, right? So that increasing of market-wide position limit is going to help, but I think the thing what SEBI hasn't done yet is increase the position limit on index derivatives, right? Because there is a restriction on 500 crores of contract value, beyond which you have to put in full amount on the table. So that means that on index you can't really. I think the open interest restriction will kind of mean that maybe some of these large guys will still look at SGX, etc., to place their trades.
Okay. Well, Sandeep Patil, may I get you into the conversation? Sorry, Sandeep Parikh. I'm very sorry. We are in a very sports mood today. I'm sorry. Sandeep, what are your thoughts? I mean, the imposition and now the withdrawal at a time when the market may appear to some to be frothy. It's okay, the timing?
I think so, because I think the whole idea was to protect the systems, right? The clearing corporation requires protection because it's the institution with the huge concentration of risk. And when you have outsized volatility and you start collecting margins on as a business as usual, you're putting the clearing corporation to risk. So the March circular will essentially address the fact, it acknowledged the fact of this volatility, and therefore they said we need to collect more margins, we need to restrict certain open positions, as Nitin said. Now they don't think that the volatility may not be a thing of the past, but it's still kind of well under control. They've seen it over the past probably 2.5 months.
So these are numbers they are privy to.
Again, SEBI's been very data driven for the past 1 or 2 years. So I'm sure they've looked at the data and seen that it probably doesn't require this level of margin any longer. They still have, as Nitin said, they still have certain other restrictions in place. Again, that goes back to the mother question, how do we protect the system?
Okay, how do we protect the system? Nitin, good morning. I wanted to ask you, shouldn't the margins be agnostic of whether it's a bull market or a bear market?
No, absolutely. But I think this year was kind of one of those years, where it had to be done, I guess. In March, with the kind of volatility that we are seeing, margins had to, especially for very illiquid kind of scripts, I think the margin going up was the right thing to do. Should we have waited this long to bring it back up? I'm not sure. Maybe because the volatility died down, many months back. Maybe it should have gone. This measure should have been withdrawn back then. But then it's okay. It's better safe than be aggressive. So I don't really see anything negative about this.
Sandeep, I have a question which perhaps is, of course, not related to the current norms, but perhaps somewhere related. This whole F&O ban, if you study, in most cases, it's the out-of-money options which are used. And some of them are, clearly not even punts. It looks like there are structured trades where trades are happening at 5 paise, 10 paise in deep out of the money options. And I had done a study in 70 to 80% of the cases, the maximum open interest was because of these deep out of money call or put options. How should one tackle that?
I really don't know why people enter into these. I'm not the right person to ask. Maybe Nitin has better perspective on why people do that, and if we know that only, then
Sure. Let me take that to Nitin. Nitin, you would have seen that, of course, right? That and again, there's a nudge which comes in that these are deep out of the money options. Of course, in expiry week you can't because there's a physical settlement, but most of these happen before expiry week.
Right. Sorry, Anuj, you were saying why do these kind of trades are taken? Is it? Is that the?
No. Should there something be done? These trades are taken specifically to get stocks in F&O ban. It looks very clear in a lot of stocks that a lot of these trades are being taken just to get the stocks in F&O ban, and after that you see big moves in the stocks.
Manipulating the positions in such a way that you get them into ban, and then you can have fun and games there. That seems to be the pattern, Nitin.
No, I mean, I know it's been brought up before. So maybe there should be some kind of action on that. See, today there are alerts in place when there are circular trades, etc. Right? As in, as soon as there is a circular trade, we are required to kind of take some action. If say the same customer is selling and buying, I mean, for this to happen, the kind of trade that you are saying to happen, you need the buyer and the seller to be working together, right? Because otherwise it doesn't make for someone to be doing this, on their own they can't, right? But then as soon as there is a seller and buyer, the same seller and buyer involved, there are alerts in place, and we are supposed to, kind of take some action as a broker, block accounts or whatever, right? So, but that said, so clearly, if this is happening, it's happening through multiple, accounts. So, they're kind of, if someone's doing this, they're kind of doing it within what rules and regulations allow it to be done, right? So I don't really know what restriction you can put. I mean, it's a very it's a very gray area, right? As in, how do you decide where open interest in which strike can be allowed and for which strike cannot be allowed, right? As in, it's a tough one even for the regulators to solve. So I don't really know if there's an answer to this.
Okay. Sandeep, you want a second shot at that? Because this keeps coming up, and some marquee big stocks, like the other day, Tata Motors. I mean, such large stocks tend to go off F&O because of this practice.
Yeah, so Lata, I think the key is really why are people entering into these? Are they kind of doing these by way of manipulation, or is it kind of they're just punting here and there, and obviously you need two hands to shake, so you do have a buyer and a seller. But I think the key to manipulation is intentions. Are people trying to manipulate the market? The answer is no. It's probably not an offense. And even circular trades, as you know, there are multiple case laws where there are good reasons to do circular trades as well. So circular trades by themselves are not illegal or manipulative. So again, I can't really answer this question till I know why people are doing this. And by the way, Nitin, fantastic this thing on the nudge. I saw it yesterday on Twitter. It's really great idea.
Way to go.
Okay. Well, Nitin, I also wanted to ask you about the retail volumes. I mean, we've seen a lot of participation come through up until now, but have retail volumes sort of gone through the roof?
Yeah. No, I mean, see, the last 2 months, the new account openings have tempered down. So like, we were trying to figure out why, and as and when more people are getting back to work, it seems like the account openings for brokers are coming down. So maybe, looking back, this work from home enabled a lot of first time investors to look at the stock markets. So, so the volumes, I mean, the ferocity in which new participation is going up, say, 3 or 4 months back, that's tempered down now. So it's we are opening at the same pace as we were opening in maybe just before COVID. So so that is kind of tempered down, but the trading activity itself, that is complete factor of the volatility in the markets, right? As in the last 2-3 days they were volatile, so you have more trades. So I don't, people trade more if there is more volatility. So I don't really, think actually, you can actually have a one-to-one kind of a correlation between number of people having accounts versus trades. Trades are a direct factor of the volatility in the markets.
Right. Nitin, that jersey that you framed, is it Lionel Messi's?
Yes, it is.
Okay, so, interesting because, I can see it framed. Is it because you went to Barcelona perhaps and got it there?
Yeah, it's one of those signed ones, yeah.
Your frame is one of the most interesting, because I also had a question on the cycle. I wanted to know, is that the cycle that you use that you hauled on the wall, or is it, tell us the story there.
Yeah, no, see, the thing is, Bangalore used to be a brilliant place to cycle 10 years back. So I used to cycle almost every day. But it's really bad now. So there's no point having a cycle anymore. So I have a couple of cycles, both on the walls. I haven't cycled for a bit now.
All right, Nitin, pleasure speaking with you. Sandeep, you as well. Thank you very much for joining us. Yes, there's a guitar as well. There's a cycle, and there is Lionel Messi. Very interesting.
It's a sad story, though. He was someone who used to cycle so much in a city and now has to haul it on the walls.
Yeah, but then he's a successful businessman. He wants to make money, so he doesn't have the time either. But Zerodha, that if it had been listed, would have been a COVID-proof stock, because they made money during
lockdown time.
Okay, well, that was a bit of fun and games, but the market is actually having a hugely volatile time.
Yeah.
Another reason why perhaps Nitin may wanted to go back to work. It came up in the green 1/3%, and now it is back in the red 1/3%. The Nifty Bank is even more volatile.
The inclinations are in for one of those expiries where the market is volatile and gives you trades both ways, or traps you both ways. Put it that way. It respected the low. It first fell, respected the low, then had that rally, then.
Which is the number you're looking at? Low as it?
I think that number is gone now, Lata.
12,800?
Yesterday low is gone. I think now if you're looking at a number, that would be 12,750, 12,750 to 800 zone. I think this is one of those violent shakeouts that the market could be going through. You've seen also the Thanksgiving weekend, so the FI volumes are low. So that could also be happening right now.
Fair point.
Okay.
We'll take a quick break on that note, and then we'll have a lot of corporates joining us. Rajneesh Chopra, Global Head Business Development at VA Tech Mubag, joins in to tell